Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you discussing the events of last week and hopefully trying to decipher what might happen over the next 5 trading days. Before we do that, the disclaimer is important. We need to discuss it. It says that everything we're going to talk about tonight is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this very general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Other than that, it's important to remember that trading is risky. Markets go up, markets go down. They might not go the way you want them to. You could lose money as a result. And if that's the case, it's always you who's responsible for the stuff you do, not me. Of course, if you make money, then it's definitely my fault. Apart from that, the agenda for this evening is to, you ask questions. I'll give you my best answer based upon the technicals. It could also be something about the 3 M's of trading, so methodology, money management, and mindset. And on that point, there was a really good article, I don't know if you saw it today, on the Livewire site. Right there, this one here, not this one, forget the Magnificent Seven. I'm sure that's very good. But I'm talking about this one over here, written by yours truly. You'll know Warren Buffett, 6 reasons why the Buffett approach won't work for you. And I love what I do here for Livewire / Market Index. They're effectively the same company, but I just love the platform that it affords me on such an ardent Buffett-loving platform, which, to be fair, the first article this morning, we led with Buffett's retiring and how wonderful Buffett is, but to their credit, much to the credit of Livewire, they allow people like me to get on and present the other side of the coin, which is why, not why Warren Buffett is bad at investing at all, but why you've got absolutely no chance of emulating him because you're not Warren Buffett. So that's a really fun article. I felt I enjoyed writing it. I encourage you to read it. Give it the thumbs up as well. That always helps me. And comment if you feel like commenting. Also, let's head over to the AMI Broker screen, where we are going to kick off by looking at, when I can find the right place, the Nasdaq Composite Index. That's the right place. There it is. And we're going to do our portfolio management model. And I might zoom in a couple here just so we can get a little bit more detail on that last candle. That last candle there, I think just smacks of a little bit of indecision. That's what I mentioned in my evening wrap tonight. A tiny little bit of indecision, still very much demand side. Futures are down a bit, so probably a lower open in keeping with some of the indecision that we would ordinarily expect in the long-term uptrend ribbon. If I saw a black candle tonight, another black candle tomorrow night in that ribbon, it will not surprise me one bit. And as we often say here in live market analysis, pullbacks are not to be feared. They're to be, we're not encouraged, but anticipated with optimism even in an uptrend, because we get to see the supply side's response to the rally that we had. The rally that started at 14,784, pushed into 17,137, a relatively shallow pullback into 15,685, and then just demand side candles. Even when it was falling from 17,137 into 15,685, these were still demand side candles, as we noted at the time. So a wall of demand cannot continue forever. At some stage, it needs to find some supply. It'll get to a point that sparks supply, latent supply. The system goes, this is a good price level for me, the liquidity is good for me, and maybe even there are some underlying news events that are stimulating me to become part of supply. That's a good thing, because it's about price discovery. It's about understanding just how much supply there is in the system now. So if we get a very shallow pullback, one that terminates probably around whatever that high is there. So the high of that candle is about 17.5. Nice round number. We start to see lower shadows pushing into 17.5. High closes coming up above that. It's going to tell us that, yes, we found supply, great, but there's not a lot of it out there. And the demand side stands ready to soak up that supply and buy the dip. If we get that scenario, we're going higher. I'm very, very sure of that. We should see at least sort of an 18,605, and then we'll see where we go from there. If, however, we push through that 17,500, because there's 1, 2, 3, 4 significant demand candles, and that candle actually I've got highlighted there, that's the 30th of April. That's, I think, the most important one of them all. There was substantial demand there on that day. And if we close beneath that candle, where is that demand gone? mean, it's not there anymore. All the people who thought they were getting value on that day no longer see value at that level. And if there's enough supply, excess supply to close beneath it, I think it speaks volumes for where we're at in terms of this still bear market. I did write a stat during the week that we had rallied. We had rallied more than 20%, just a smidge. But we had rallied more than 20% from 14,784. So some people will argue that obviously 20% fall we know is a bear market, but some people will argue that if you rally 20% from that low, you're effectively out of the bear market. Other people prefer to wait until we make a new high, and then they say the bear market's over. So depending on which side of the fence you sit on. Let's head over some portfolio management on this one. What did we say last week? I think we said we were moving from 1/3 to 1/2 risk invested. We said, you might want to consider just backing off a little bit on some of the shorts, or not replacing shorts that get naturally stopped out, or you exit because they're giving you signals to do so. So, but we also agreed that we wouldn't be getting to half instantaneously. It would be a process of finding the right setups if we could find the right setups. And I'm pretty sure we said something similar over here on the ASX 200. Maybe we're a little bit more positive on the ASX 200, if anything, because the trend here was just so much cleaner. There was no pullback and higher trough like we saw on the Nasdaq. It was just a straight move from 71.69 into whatever it was last Monday. And we had five white candles. We had 5 white candles since our last update. Obviously, today's candle is the opposite of that, and a decent little supply side showing as well. Full black, close on the low. Volume wasn't substantial today, so I don't think there was a great deal of motivation there, either from the demand or the supply side, hence the lack of volume. And the move itself didn't take out Friday's low, so I'm happy to discount it for now. It's a little bit of a warning. It's got my attention, but it's certainly not enough to signal to me that something really sinister is going on. So we need confirmation one way or the other. Another big black candle would tell us that we're likely setting up. And I think this is all this is, again, in line with this idea of pullbacks are good. Pullbacks are good for us in uptrends because we get to check how much ammunition the supply side has and how much, how steadfast the demand side is. I think that long-term uptrend ribbon, and it is long-term uptrend now because it went back to dark green. You would have noticed that probably on your trading view screens because you've all got my indicators. That will be an area of dynamic demand now. And the key, and as you all know this, my definition of the transition to a long-term uptrend is to move above the long-term trend ribbon, pull back to it, and do the dink, the test, the hold, and the trough at or above. And that converts us back in a new long-term uptrend, which I don't use definitions of 20% up or down. I think they're relevant to me. You know what my definitions of bull and bear are, and that would officially put us back into a new bull market. How long it's going to last for, I don't know. But that you have to have definitions, and that's my definition. So 50% I think is valid here. We've effectively got a foot in both camps, don't we? We've got 50% cash, which is not an insignificant amount of cash. Your average balance fund can hold up to 10% cash, but typically they're holding around 5%. So they're 95% invested most of the time. They were 95% invested when we're at 86.16, and they were 95% invested when we're at 71.69. They're also 95% invested now. We moved order of magnitude, probably took about a third off the table there, probably went to about half here, probably went to a third and a third shorts there, moving back to, 5 days ago? And then wherever we are now. Okay, so did we pick the top? No, we didn't. Did we pick the bottom? No, we didn't. But if you did move your portfolio risk in that fashion, effectively you just eliminated all the downside. You kind of were about 50% here, and you're back to about 50% here, but you didn't have this experience with whatever capital that you got out of. Up to that point. And that is the goal. That is the goal of my portfolio management model. It is simply to diminish that downside risk. We'll never be able to eliminate it, but we want to substantially diminish it. And that will substantially improve our long-term returns. You take out those big V-shaped drawdowns in your equity portfolio equity, and you'll know that because before you met me, you all saw your super funds and how they performed in the GFC, right? In the GFC, using my model, you can see now, and I want you to go back and do that research and say, oh, okay, this is where Carl would have gone to 1/3, this is where Carl would have gone to a half, this is where he would have been max 1/3 risk with third shorts backing it up, and then it would have been 2 years later that he started to move back into the market. And yeah, no, he didn't quite pick the top, he didn't quite pick the bottom, but he missed out on all of that downside volatility in between. And by having that money in cash, think about how much more money you've got to reinvest back near those lows, not at the lows, but near those lows on the way back up when the next bull market begins. You are going to be in an exponentially better spot than the person that's not in this webinar right now. Let us move on to, where should we go? We're going to do the kick around the grounds, aren't we? So we're going to start with the Russell 2000. The key, I think, the key US benchmark index now, because it is the small caps, it is, oh, look at that. Well, there you go. That's a decisive candle on Friday. I'm so curious to see how this turns out tonight. Obviously, we're going to have a softer open, but if this can put in a strong showing tonight, this is going to lead us all out of Trump's trade war bear market. So that's actually quite encouraging. Certainly no reason there to push me off my idea of 50-50 at this stage, and no reason also to push me any further. Let us head over to Europe. Oh, that's a V-shaped recovery, isn't it? So Europe's not too fussed about things right now. Certainly not Germany. That was France. This is Germany. And that's a magic chart. I mean, that is the sort of chart that makes you wonder why we had to go down in the first place, doesn't it? Oh my gosh, FTSE and Spain, that is just amazing. The Spanish index, the best in the world. The Hang Seng is actually recovering really well. Also, the Nikkei, not as good, and we can see the haves and the have-nots here clearly in the charts. Nifty 50 not bad. The Shanghai Composite there, I would put in the bottom half, let's say, of world indices. So what does that tell you maybe about who the losers are going to be in this trade war? Let's just quickly bring it back home and have a look at some of the local sector indices we talked about last week. The discretionary was starting to look quite good, despite the narrative out there that you're going to hear again outside this webinar that we're coming in for some sort of recession, or discretionary stocks are overvalued, or some silly business like that. And they had a very good week today. Obviously, a little bit of a turnaround. Energy just rolling over there. We've got a few thumbs down. I might just check the notes here. And I'm sorry for not, Terence has got some AI notes there, I guess, if you want to follow along at home. I don't think I've got any warnings. I'm not sure what the thumbs down were for. Maybe they were for the discretionary sector, or maybe they were for the energy sector in anticipation of what a horrible chart this is. The banks, that's a decent down day today, isn't it? Mainly Westpac related. And we kind of go through this cycle with Aussie banks of they're invincible because the big super funds have to own them, and they're very defensive and they're very liquid, and the fact that their fundamentals aren't very good, and that frustrates the crap out of all the big brokers and analysts who keep complaining that their fundamentals aren't very good, but they keep going up. So we do these little dinks, don't we? But probably just a dink for now. We see gold was struggling after that big black candle. Haven't had a lot of reason to do much else since then, to be honest. So I think that's still a decent call. I am seeing some of them firm up on the charts. We might get to some of those tonight. So moderating my view towards Aussie gold stocks. Healthcare, that's a credible rally. That's definitely a rally that needs to be taken seriously. Obviously, we want to see how it responds there to the long-term downtrend ribbon, as is technology. I think that's also a very credible rally, and seeing quite a few of those big tech names coming back up in my chart watch scans. Also heading over to materials, decent again. And so what are we seeing here? We're seeing more decents than not. So that's encouraging for what the Aussie market could do. That's just the other resources there. Property, again, another credible rally. And staples, wow. That was one of the relatively strong ones we identified last week, doing very well, as was the telecommunications index, which we said was a Telstra index. It must have pulled back today. And utilities, I think we might have said was okay, still okay. Let's head over. Actually, before we go, we'll do the base metals as we like to do here, just changing that to a line chart. And ideally, these are all pushing back up, so we're not going into a global recession or anything like that. In the last 5 days, mixed bag there for aluminium, not much to talk about. Same on copper there, mixed bag. Look, up on Friday, I think is somewhat encouraging. Nickel, ditto. Lead, ditto. Tin, not as good, let's say. And zinc probably not as good also. So, hardly a glowing endorsement. Lithium prices were closed for the back half of the week due to May Day, public holidays in China. Let's head over to the trading view screen now. And we're going to go, where are we going to go? We're going to go to here, aren't we? And let me go here, put this on here. Actually, I'm going to cancel because I don't know where that's going to go. Let me do this for a second. So I do want to show you something. Open anyway. That's fine. So we can go back to here. So this is the peaks and troughs model that I've been working on. And I wasn't happy with it last time we looked at it quite a few weeks ago now, because it wasn't picking up a few peaks and troughs where there were outside bars and such that were taking out a trough once it's formed. So I've managed to iron out the kinks. Don't worry that there's no lines joining them up. That's just an easy overlay I can do later on. But otherwise, for all intents and purposes, the peaks and troughs have been labelled. Don't worry about the arrows. They're more for me than you. And we will get them joined up. I'm just missing the last peak and last trough here, and that shouldn't be too much for me to fix up. So hopefully I'll get some time to do that this week for you, and then we'll have another indicator for you to play around with in the Trading View screen. So this is going to help us, or help you, in your analysis, which we do on Monday nights, isn't it? Which is, okay, how do we get, when we do our case studies of how to get out. So where's the trough? How we close beneath the trough? What's the candle? And so on and so forth. So you don't have to go and hover over things and work them out yourself. They're there. So I'm very, very close on that. And it's been a bit of a labour of love to try and make that happen. Because it's simple, but simple concepts sometimes are very hard to program. We're going to go here now, and we're going to go back to silver. Not that one. That came up. We must have saved that last time. Oncology Institute. I don't know who brought that one up. Hopefully, he got on, because it's gone very, very well. But no, we're heading over here to silver, and just going through the motions here, but fairly sideways. Silver bugs out there. I don't think there's anything to get excited about. I haven't looked at these. I don't usually look at them. Nothing going on there on platinum or palladium. Maybe palladium's turning up. We'll keep an eye on that. And there's gold. Okay, that's today's candle. So that wasn't doing anything of the sort when I was writing my evening wrap. That was flat. So that's happened in the last few hours, I suggest. And that's a decent move. If that sticks, then I will continue to moderate my view on gold so far as that I would start to become positive again on it. And Aussie stocks and the gold price don't always move in lockstep, so it's going to show that the gold price probably is outperforming some of those Aussie gold stocks. So that I think that looks very interesting if that white candle can hold. Copper largely sideways, but don't count it out. As long as it holds that long-term uptrend ribbon. Iron ore also largely sideways, but probably more skewed the other way. Uranium, that's impressive for the uranium bugs out there. Maybe a little bit unexpected, but we picked this pretty early. If you're following my analysis, literally on that day there, I pointed it out in ChartWatch in the evening wrap, and then I followed it up a little later on saying, short-term trend is changing. Long-term trend's still got a lot of work to do, but at least some light at the end of the very long and dark tunnel there. For uranium bugs, heading back now to natural gas, actually bouncing a bit. Crude oil heading the other way because we had an OPEC decision today where they're going to increase production by a bit, and that's down a bit accordingly. We'll finish off by looking at, actually before we go, we might just check out the US dollar index because we want to see if capital's flowing back into the US dollar to rectify some of the fears around whether they still have the premier reserve currency of the world being US Treasuries. It hasn't spiked anywhere near as much as their stock market has it? And that's interesting. So that's telling us that this rally in the US is probably, unless we go out and interview every fund manager, we won't know, but probably predominantly a domestic investment dollar rather than an international investment dollar. And it does make you then wonder how far their market can go if only the domestic dollar is being applied and the external, the overseas dollar is heading maybe to Europe. We've seen the charts there. Maybe to Australia. We've seen the charts here. Let us, for completeness, maybe we'll look at Bitcoin there. We said last week, didn't we say you could add some if you never had some, and straight away it started going down. So that's no surprise at all. And let me check the euro versus the Australian dollar because I'm going on holiday soon, and that's a little bit of a relief there. We're going to go to bonds, and might have said last time on the bonds that we don't want to see them go down too much, because there'll be an inflection point where too much is scary, because it means the US economy is going into the toilet. And we saw a bit of a bounce there on Friday. So that's helping, better than expected US jobs data to blame on that one. So steadying the ship. If this hovers around that long-term trend ribbon for the next 6 months, we're probably fine, actually. That's actually not a bad result. And confirming, I don't know, I think that's dirty data at the end there, that shadow. But the 2 years also rallying there, so the market's perception of a chance of recession is diminishing somewhat, and that is a positive for stocks. Aussie yields still hovering around the middle. We did get a bit of a boost there on the flight out of the US dollar, US bonds. Okay, let's head to your offline requests, and we'll kick off with, make sure I don't have any warnings or technical issues. I don't. We're going to go to Mick, who has a couple for us here, PNV as a turnaround play. So let's change that back to auto, and we'll go up here and here, and we'll go to PNV, zoom normal, and not a lot of scratchings on the screen here. I guess last time we looked at it, we had a downtrend and a downtrend. Mick, it's not a turnaround play, can't be a turnaround play, because we don't yet have a short-term uptrend. I don't know, we kind of keep going over it, that's all right. So turnaround play requirements. Maybe you can give them to me. Hey, have you learnt anything? Because I'm guessing from this question we haven't learnt much. What do you reckon? Just let me type. You type them in, and then I'll copy and paste them over. Number one, what is it? Turnaround? Not turnaround play. I don't like that word play. I like setup. Turnaround setup requirement. Here we go. Come on. Green short-term ribbon from Roscoe. Well done. So let me do this, and I'm going to do this, and we're going to go in here. Green, short-term trend ribbon, so we're going to go STUT, right? Short-term uptrend. That's definitely the first one. Well done, Roscoe. What else we got? Predominantly white candles. Yep, I like that one. Let's go for that. 2, and these are in no particular order. Predominantly white candles. Okay, what else have we got? David's come in. That was David, sorry. So Roscoe's got the short-term trend ribbon. Dave's got the white candles. Roscoe's going downward pointing shadows. Yep, we don't. Yes, absolutely, because it's not just white candles we want. In fact, the right way to write this is predominantly demand side candles, and in brackets, then we go i.e. It'll appear on the screen in a second. I.e. white bodied and or downward pointing shadows. Right. So we'll put that in. There we go. What else do we need for a turnaround setup? Long-term trend ribbon, at least orange. Well done, Jackie. Good. I like it. Long-term trend ribbon, at least orange. But it in theory, it could be up. I mean, if it so happens. But at least orange. We just don't want it to be pink. Okay? I.e. not pink. Okay? Not down. Okay, put that in. That's logged. What else do we want? RSC and volume increasing. Yes, I don't mind RSC increasing. Absolutely. Let's do that one. This is a bit of an icing on the cake. Yeah, absolutely. Improving RSC, so it is outperforming the broader market. And the other one you've got here is volume increasing. Volume doesn't have to be increasing, but it's always nice if we've got some extra volume there to tell us that we've got plenty of interest. I do like to see, however, volume spikes. What's the best way to do it? Volume, increased volume, or volume spikes. I think that pretty much says it, doesn't it? Volume spikes around recent major turning points, major lows, and we're going to see major lows at, i.e. At significant significant volatility And what we're saying there is days where we've seen significant volatility, significant volume as well. Okay, and so and you might say, hey, Carl, what's significant volatility? Well, I'm glad you asked because I gave you an indicator to determine what it is. Okay, the red horizontal-ish line is your average volatility over how many periods. It doesn't matter, it just is, right? And then the vertical lines are telling you if it's above average or below average. So above average volume and volatility near major turning points. So that I wouldn't call that a turning point, but certainly around here I would. And it doesn't have to be on the turning point day, but on or just after it would be good, just before it's fine as well, but just around, okay? Because we just want to see that blow off. We want to see the people, because you've got to remember that there were some very clever people who shorted the stock on this day here. By the way, go back and check ChartWatch scans feature downtrends, because it would have been in that day for sure, 100%. And it was also, I bet you, in that day there. You know, if I'm wrong, please tell me. So some very smart people, potentially you lot, shorted this stock on those days, and they're loving shorts. They're loving shorts. They're not covering back shorts on a day like that, are they? Other people did, which is, gosh, I know I'm going to get sidetracked. But would you have covered back your shorts on that day? Would you have taken more shorts? And I think we're seeing there a bunch of people buying into it, thinking, oh, this is really cheap, right? And then a bunch of people just shorting the hell out of it on that day. But at some stage, the shorts will need to cover back. And they're probably going to do that after we've had sort of a bit of a gap low. We've hit a round number like $1. We start to make higher peaks and higher troughs. And, you know, that's when we want to see that influx of volume to tell us that the shorts are starting to move out of the market, and or potentially we've got some big demand coming in. So certainly that is as good for me. So well done, Hoozles, picked that up. Sudesh is saying the dink. Sudesh has nailed it. That's kind of the final flourish, isn't it, Sudesh? And I bet Sudesh meant to say the dink at the long term trend ribbon, because that's how we know it's turnaround setup. I mean, that's the definition right there, and that is the signal, isn't it? That's our signal. So let's put that on there as well. So let me just see what else you've written. Close above the orange ribbon. Well, there you go. So close above the orange ribbon. That's the same as the dink. Adonis has got it as well. And thank you so much for everybody putting in Mark. Mark's got one that I've forgotten. He's probably screaming at the screen right now, because part of this understanding that we've got a short-term uptrend, yes, the ribbon will turn green, but that's a lagging indicator. What we want is to know what the price action is doing. So let's go 1.1, because I want to put it in around there. Good. I mean, we have good price action for down. We have good price action for up. Let's say demand side price action, and we'll go in brackets. You know, return to rising peaks and rising troughs, and this is an absolute minimum for a turnaround setup. Rising troughs, because rising troughs obviously demand reinforcement. But remember, heading down, we've had lower troughs. Every time we thought there was a point of demand, it got hit with even more supply, and the demand ran away. We had lower peaks. We tried to rally, and we got hit by more supply. Demand ran away. So to move back to 1.1, demand side price action, rising peaks. Now demand is being reinforced. Supply is being removed at those troughs. Very, very important. I think we got them all. So it looks like everybody who responded got something different, which is brilliant. And I wonder, because it's not the first time, ladies and gentlemen, I don't mind doing it. Hey, I'll do it next week again if that's what it takes. But I wonder how many people have actually written down these rules and stuck them somewhere on the wall where they do their analysis. But we've got them here now. So that's good news. And no doubt you're probably screenshotting that. And you can get your favourite text extraction tool or feed it into ChatGPT and say, hey, ChatGPT, give me the text from there. And it will do that, and you can clean it up yourself. And then print it out and stick it somewhere on the wall where you do your research. Now, that's not it. And I'm not going to draw all squiggly lines on this chart to show what will happen, because I know we're going to find one. And we'll find all of those things soon enough. But the question now I have to put to you is, well, if we can't see those things, then what do we do with a chart like this? Not a rhetorical question. Type it in. I mean, I know what you're about to type, but keep typing. But we could say, well, we could assess it for an aggressive setup. An aggressive setup's got a whole heap of dollars. It's got to stay out. There's no setup here. We've still got a long-term downtrend, not an orange trend. We don't have a green trend ribbon. We do have good price action though. We've got rising price action, demand side price action. Do we have predominantly demand side candles? I'm going to just say we do. It's not resounding, but I think there is. And I think that's, we've got improving RSC down the bottom, you can see that. And I think we do have some volume and volatility markers around the lows. So this is not devoid of ticks in the turnaround setup box, is it? It's just not getting all the ticks. And we want all the ticks. That's what we're after. So the next thing you might do is then, okay, well, let's assess it for an aggressive setup. And the aggressive setup needs a bit of a base pattern. So preferably bouncing along the bottom for a while. We've still got enough reward to risk up to the top there. But it also still requires a short-term uptrend. It also still requires good price action. We don't have the short-term uptrend yet, so it's not an aggressive setup. So given it's not aggressive, it's not the turnaround, it's certainly not continuation, we would pass for longs. That doesn't mean that we haven't done enough analysis yet, because we would assess it for shorts, and it's not setting up for shorts either because of the price action as well. So nothing, it's just a pass. But what we have here, ladies and gentlemen, is a set of rules that, whilst each bullet point, is it fair to say, requires some interpretation, right? We're all going to interpret, well, we can't interpret the green ribbon. The green ribbon's green. Unless you're colourblind, that one we can't stuff up. Demand side price action, I'll put to you, we can't stuff up. And once we get our indicator on Trading View that I'm creating for you, 100% you can't stuff that up. Predominantly demand side candles, that's a bit of a judgment call, isn't it? Do you feel, and you're going to feel something, I'm going to feel something, are they more white or are they more black? You know, is there a few more downward pointing shadows? That's a little bit subjective, isn't it? But I think we've got enough information. You've got enough experience on being able to make a decent call there. I trust you. Long-term trend ribbon, well, that's orange. It's a colour. You can't screw that up. Improving RSC, well, that's an indicator. I gave that to you. You can't screw that up. Volume spikes around recent major lows. Okay, well, I think that's a little bit subjective, but I have given you, again, the indicators. They're above or below their averages. So, and then the dink. I think we know how to do a dink as well. So the good news is you shouldn't really, I know you'll try, but I don't think you can stuff that up, okay? Let's keep moving. We're going to go to Mick's next one, because he's also saying this is a turnaround setup. So let's see how close he is on this one. Aha! Okay. I wish we did this one first, because I could have kept all of the writing from the last one. I can get it back. It's not hard. Let's go PNV. Mick, you've absolutely nailed it this time, because you've given me like the one we do want to talk about next, isn't it? Which is this one. So let's put this on here. Let's go paste, and that'll come back. There we go. There's all our rules from before. Isn't that magic? And let's tick them off. Do we have a green short-term trend ribbon? Yes, we do. So that's a tick. Do we have demand-side price action, rising peaks and troughs? Yes, we do. That's a tick. In fact, we've got good price action, because what we can see here is this last trough, right, is at or above this second from last peak. Okay, and we can probably, I won't do it, but you might do it on your version, where you say, you know, and good price action too, because that's something we have talked about, good price action. Predominantly demand side candles, yes, I do. I think this is very clearly predominantly demand side candles. Long-term trend ribbon is at least orange, yes, it is. Improving RSC, outstanding. Volume spikes around recent major lows, so around here, yes, there is. It's a little bit afterwards on that day there. That's where all the short covering came in and the new buying came in. And we've certainly got it there. Hopefully this is starting to gel together for you. Do we have the dink at the long-term uptrend ribbon? Look, it's at the bottom of the long-term uptrend ribbon, and you know this. And we've seen this many times. But I think we've also seen that, we've seen just as many, that dink at the bottom of the ribbon. They go just as well as ones that dink at the top. We just want to see a supply-side response. And I started this whole presentation with this concept of this supply-side response, didn't I? This idea that in a rally, a pullback isn't a bad thing, because it gives us so much information about where the market is positioned now. And what we saw there was a really shallow pullback at the long-term uptrend ribbon. We should expect supply there. Okay, why? We don't know. We don't know why we expect it. We just do, isn't it? Because it works. What I'm saying here is we don't know why the long-term trend ribbon works. It just does. So we get supply there. It's a shallow pullback. That's a tick. That's a dink. And we've got all 6 out of 6. So, ladies and gentlemen, if we've got 6 out of 6, I put to you, is this a long-term, is this a turnaround setup? Yes, it is. And that's what I think is really neat about this system. What I need you to type in now is, can somebody just tell me the dividend yield, the PE ratio, the interest coverage ratio? Just give me 100 words on their management, and if their management is good or not. I just want to understand the value, if there's good value in this stock. A few people laughing at that one, a few people crying. I think your reaction is justifiably in between those two extremes. My point is, if you get that stuff right, and if you've been listening to me for any length of time, you know this setup works, right? You already know it works. Who gives a shit about all that other stuff? Like, it's completely irrelevant now. Thank God for that. All right, let's say yes, plus 1/3. The only thing we need to do now is plus 1/3. Now, the other thing, I'll ask it, and if you want to respond. Where is this stock going to be in 3 trading sessions' time? And then tell me where it's going to be in 10 trading sessions' time. And then tell me where it's going to be in 20 trading sessions' time. Then tell me if any of that matters. And it doesn't. We can't tell the future, all right? All we know is we've got a setup. We know the setup is pretty good. It's not perfect, and that's it. We measure our risk, we put it on the line, and the rest is up to the market. We come back, we check it, we adjust our stops if we need to, we add risk if we need to, we take risk off if we need to, we rinse and we repeat over every trade between now and the last trade we ever do on this planet. Ladies and gentlemen, welcome to my strategy. That's it. Okay, let's keep moving to Missy's got Telstra. And we saw that, it's not that bad. We saw that the Telstra index, the telecommunications index earlier, and it was a big black candle. I thought, oh, Telstra must have had a bad day. Actually, it didn't. And Missy, this is more of a continuation setup, isn't it? And do I need to do the tick boxes for continuation setup? Pretty simple, light green, dark green, and pretty much all the other stuff we talked about. There's not much difference there. Maybe the relative strength comparative is coming off a little bit on this, and that doesn't surprise me given Telstra was just so amazing through that whole downturn. I put it in on this day here. I don't know if you remember. I might have even discussed it here on this day, but certainly I put it in ChartWatch Scans as a feature chart on that day. I felt very strongly about it because, that gap, that big white candle, I love buying big white candles on news. This little down move here is the dividend. So that's not even a down move. That's actually an up move. And I think it's been very solid since then. Better than a term deposit, certainly, and bulletproof in what has otherwise been a terrible market. Where is it going to be in 3 days, 10 days, and 3 months' time? I don't know. But all I can say is right now, I have no reason, not even after today's candle. And today's candle might be the beginning of something like that. Hey, I don't know. But there is not enough in that chart to suggest to me that the imbalance, because there's an imbalance right now between demand and supply. That has to be the case. It must be the case. A lot of things we don't know, right? I don't know when my beloved West Coast Eagles are going to win their first game this season. I don't know that. But I do know there's an imbalance between demand and supply here, in that demand exceeds supply. I know that for a fact, okay? So, and I can't see, even though today is a little bit of a shot across the bow, it tells me there's a bit more supply. So I've got an imbalance between demand and supply. I've got more demand than supply. I've got excess demand, and I've got a little bit of supply. And that takes me a little bit closer to balance or equilibrium, doesn't it? Where prices will go sideways. And if we get too many of those candles, then supply will start to take control, and we'll head back the other way. But no, this is still demand side, and therefore I'm still FRP. I'm not going to add any risk to this one, obviously, because that last candle doesn't warrant it, but happy with FRP on Telstra. Heading over to ING, which is a recent entrant in the ChartWatch uptrends list. I think I put it in on that candle there, if I'm not mistaken. Today's candle was neither here nor there. In fact, that's actually a really good last candle within the context of today. Today was a lousy day in the market, and that one actually held up really well. So happy with that. FRP today, same as before. No reason to add risk based upon that last candle, but certainly happy to stay the course on ING. And moving, actually we've got Pfizer as Missy's third one, and that's US stock, so we'll do that a little bit later on. I reckon that's all of our offline requests. So you've been very, very patient, everybody who's online, that we do your Aussie online requests now. Going to David. Hi, Carl. Wow. Seems to be a turnaround. I agree. I think I ran it. I ran it here. Not a great day today, but again, a pretty lousy market. So I think all things considered, a good day today. And we can see the relative strength in comparative. It's still pretty solid, isn't it? Another one that did well during that market downturn, or relatively well. Certainly is a turnaround play, David, because yes, we've got the green uptrend ribbon, we've got rising peaks and troughs, we've got predominantly demand side candles, I believe. We have done our dink at our long-term trend ribbon, and we're heading back up the other side. You could argue that here is the candle where you could have gone plus 1/3. I don't know if you did, David, at the time. I didn't run it on that day. I might have ran it in the general list, but not in the feature list, simply because at that time I was still a little bit concerned about the supply that could come in from here. So it made feature, obviously, when I felt that we had taken out the supply, but I may have run it a little earlier on those days there, but just not as a feature. Okay, just to explain why you might have seen it in the list, or why you might have seen it in the list and I wondered why it wasn't a feature. And so I'm just applying the setup rules. So FRP, no reason not to be FRP, but no reason also to add risk on that based upon that last candle. Looking up, we've got a cluster of stuff from here in the past. Yes, we're going to see supply kicking in around about 35 to 35.50, but we're a ways away from that. Not too fussed about it right now. Let's go to your that's your one, and I think I've answered your question. Next high candle for plus 1/3, and we're in that stage now, because once we've had the setup or the initial setup condition, then literally every next high candle, every demand side candle is therefore an opportunity to add risk. It's as simple as that. So let's take that and put that up there. And I think, look, I won't go back and do it on Telstra and ING, but ditto for those two as well. Let's go to Adonis. West Texas light crude looks good as a short on a break of 55. Yeah, look, it was looking really bad at the open, but by the end of the session, Adonis, it had clawed its way back. So, again, we can't make decisions based upon a live candle, so best to just see how that candle plays out now. And I'm jumping to the wrong place, and we're going to go here for you. Yeah, so I would have agreed with you. Well, look, I still agree with you, but next low close, isn't it? Next low close would be your opportunity, and we're waiting to see how today's candle plays out. You actually mentioned West Texas. West Texas, not a huge difference between the two, but ditto on that one. Let's head back to here and moving down the list. For Avant, can we look at CCL, which is Cuscal, if I'm not mistaken? Does anybody remember what CCL used to be back in the olden days? CCL was a bit of a blue chip stock, wasn't it? Does anybody remember what it used to be? CCL. Nobody's remembering. It was CCL, or did it become CCA at one stage? I'm pretty sure it was CCL. You'll know it if you know what I'm talking about. Nobody. Okay. Look, fine. It was looking more than fine back here. This is when I was interested in it, and then I don't know, just tailed off a little bit, isn't it? And then we hit sort of the Trump downturn, and I would put to you that this candle here. Certainly, we're not holding a full risk position, but I'd put to you we're less than or more than 2/3 out at that stage, and hopefully very little by the time that candle hits. But such was the disappointment of that small period of time, because some decent setups were destroyed, unfortunately, by circumstances outside of our control. Now, that's then. This is now. We're moving back above the short-term uptrend ribbon. I like this candle, and this candle. This three-candle pattern is a really, really powerful pattern when you think about it. So this nice big demand side, pull back, lower shadow, back up, confirming with the next white candle. A little bit of a flame out today, but I don't think a deal breaker. Look, I can't get too excited about this because I still feel that there's too much supply up here for me just yet. And I think we saw the manifestation of that supply in the market today, didn't we? We started to see some of that supply work its way into the market in that upper shadow. So I like it. Don't get me wrong, I like it. I just need to see a little bit more. And dare we say, or dare we require the customary dink here? A little bit of a push into that supply zone again. A very shallow pullback this time. And then on any sort of demand side candle in here, should we get one, all right, that's when we'd be looking to go. So I'll just draw a little bit of a green box in the zone where I think you want to sort of be looking for it, and that could be a candle, 2 candles, 3 candles from now, probably, and that's where we're interested in getting in on the right candle. Let us keep moving to, nobody remembers, Coca-Cola. Yeah, I had to scroll down. Coca-Cola, Raju got it, John got it, Jackie got it, Peter got it, Coca-Cola. Well done. When it was listed here in Australia. Not the American one, the Australian and some of the European, I think some of the Asian franchises, is that the right word, were vended into that business. And I'm pretty sure, I think Big Coke, the US Coke bought it back in the end. I can't remember. So many stocks have come and gone in my time, I tell you what. Let's go to advanced second one, which is A2M. And they keep making new ones. I like this one. Well, we can see the value there, isn't it, of testing some sort of supply from the past. What was that? Oh, yeah, a little bit of a level there. Pulling back, now ready to go. That's nice. We like that. We like that test. Strong, shallow pullback. I really like this one. This is, I think, a very high quality setup. A very strong demand side showing plus 1/3 FRP. I can't fault it, and that's why it is also a feature chart for tonight. And if you don't believe me, have a look over here. Store 2 is where I keep my feature charts for tonight, for tomorrow, and A2 Milk is the first one there. FCL is worth mentioning because I think we looked at it, we looked at it 5 days ago, didn't we? And I said to you, look, I like it. Next high close plus 1/3 FOP is what I wrote, but don't expect too much of it, and it did really well. So hopefully you ignored my don't expect too much of it and you went in. I did end up giving it the feature. I think I gave it the feature on that candle there, and then there. So I did end up acknowledging its quality, albeit 1 day later than I probably should have in hindsight from the webinar. That one there. So very happy with that one. Just heading off any questions on it tonight. K&B, I think it looks amazing. So that's doubled since I first put it in. SIG keeps on keeping on. Happy with a plus 1/3 there, and WA8 is exemplary also. Let's go to the next one on the list. I'm going to pick up the pace here. ASM, yes. We looked at that last week for a turnaround setup. Decent day today. Certainly saw it come up. I didn't run it in the full list, just with that little upper shadow, just indicating there is still some supply lurking in the system around here. I think we said on that day plus 1/3. Not sure if you did it on that day. If you did get in on the open, I think you're pretty close to break even, and I think we're okay. This day here is the one that I think set us on the path to okay again. And it's been pretty decent since then. In an otherwise pretty terrible market, I would call that a pretty impressive performance today. So look, I think we're okay. I think happy to stay the course here. I'm not adding any risk, but happy to run with the risk that we already have. Let's go to LYC, which is a little bit of a contentious one, isn't it? In that some people love it, some people kind of don't get it. We've got too much stuff on there, so why are you so nasty to me, God? I was going to get rid of it, but I don't want to get rid of that now because that's quite funny. Let's move this out of the way so we can see the candles. So last time we said FRP, next high close plus 1/3, close above big black candle. Okay, so we wanted to see it close above that candle there, and we wanted to see this candle appear here. We didn't get it. It should have been a white fill, but that one there, we just didn't see that. So we haven't seen it. So I don't think you would have added any risk. I don't think you would have taken any risk on the table as much as we did draw this black arrow here as a point of demand that we're interested in. We certainly are. And we tested it. We've probed it 2 times. Probed it on Friday. We probed it today and successful so far in holding that. But it is, I think, still a level where a close beneath would cause you to... I think it's going to cause you to take a little bit off the table, even with this short-term uptrend, because of this here, right, which confirms this peak here and this black wall confirms that, doesn't it? Confirms that, but then it gives us these lower peaks and lower troughs. I do think, and I'm just going to move it now because we want to be practical here. You might say, okay, you're moving the goalpost. No, I'm just moving my exit to be consistent with where the demand is. And if that means I might lose a bit more, well then so be it, because I'm not going to get out at an imaginary line here, because yes, it should have been the point of demand, but demand's spongy. I mean, the money comes in half an hour late. I don't know, they're out having a coffee. So that's the level. And just reiterate, close beneath there, I think you start to manage your risk. And also, I think we can leave that back up here. I still think the next high candle that closes above this black candle, I don't mind that. I still think that's roughly right. If it's a monster, white candle that closes slightly below it, it's still fine. But order of magnitude, that's probably what it's going to take anyway. But let me just add to that that on a close beneath. So close beneath, then I think we do need to start to manage a bit of risk, and that's all I'm talking about here, because the trend would still be up, and depending on the candle, minus 1/3 is a minimum. But if it's a really bad supply side candle, then I'd be doing more than that. So a few possibilities, and that's how we should always be analysing our setups. For our open setups is, well, I need to understand where I'm going to add risk. I need to understand where I'm going to reduce risk. Okay. Let's go to NST. This is not aggressive because it's more of a continuation. So not an aggressive. And we're just waiting for it to set up for a continuation. This is too much. This is too much for me. That's too much. These black candles, that gap down, I must see at least some sharp demand, a V-shaped rally, strong candles, shallow pullback, and going again. And it would be somewhere again with the green box. And I'm just giving you an idea of how much needs to occur for me to become interested in this. That's not a green box. Somewhere really sort of, and I'll draw a long box here, but somewhere in there, or a nice long move back up the other side as a minimum for me to start to get interested in this, because for me, question mark, too much damage done. Question mark. So have we set in motion, I was going to say, it's kind of the right way. I think have we set in motion this idea that there's too much supply in the market now? Have we created too much latent supply? And by that I mean all the people that were long, and I would have been long this personally. And for me, I just take my licking to get out, but not everybody thinks that way. Now they're a little bit depressed. They got in at 23, now it's 19. They'd love for it to get back into here to start to supply again. So that's what I'm worried about on NST. So you have to take some monster candles to tell me that the demand side is so strong that I don't need to be as concerned about that latent supply. All right, Apendra has WCN. Nice turnaround, yeah, White Cliff Minerals. Let's zoom normal. It's actually not a turnaround, is it? It's more of a continuation, because we're double green here, but sometimes we get a bit of crossover between the setups. We call them those hybrid setups. But no complaints here. I can't fault this one, apart from the fact it's a little bit sketchy, isn't it? We can see the candles are blocky. When they're blocky, open and close, they're like two trades for the day or something. We've got some days here where it didn't move at all. It was open, high, low, close was the same price. Traded 44,000 shares on a 2-cent stock. Does somebody want to put in the calculator 44,000 shares at 2 cents? Okay, it's not a lot of money. It's pocket money. My son's got more money in his back pocket than that. So that's might be a bit of an issue. But hey, the price action is the price action, isn't it? So just be careful with these. You don't go in all guns blazing. But yes, FRP, I think if you've got it, I'm happy with plus 1/3 even. I think that's a strong candle at the end there. I know a little bit of an upper shadow, but not enough to push me out. Let's go Rupam. We've got a couple of US ones. We'll do those on the way back up. GSS for a turnaround play is from Michael. Michael, I will refer you back to the research we did at the start of this session tonight. And you may have typed this in before we did that. You would know now that I don't need to do much more analysis here, because it cannot be a turnaround play. Nor is it an aggressive setup for that matter. And it's none of the short setups either. So it's a pass. Let's go. I've got a bunch of responses to my questions, which actually proves to me that Michael would have typed that in before we did that research. And then we're going to go to Rishi. Hi, Rishi. I hope you're well and had a great weekend. I did. Thanks, Rishi. I would like to know the real trend of ASX, GCM, and MTM. Let's go GCM. I don't know about what the real trend is, but the trend ribbons are as close as we're going to get to answering your question, isn't it? The real trend. Because I think, well, I don't know, if you're listening to me, you think also they're fairly reliable. So we're pretty neutral. I mean, short-term trend is neutral. Long-term trend actually is up, so that's a good sign, but it's pretty flat. And you can see we're sort of vibrating above and below a little bit, both of those trend ribbons. The price action is decent. You know, we've got, if I squint, rising peaks and rising troughs, maybe. Again, the tool will tell us unequivocally at some stage. I won't do the work here. I don't think I need to. And candles are a little bit sketchy because, again, we've got this illiquidity factor here where blocky candles that trade all at the same point. So hard to do. It is hard for me to do my brand of technical analysis on this style of stock. But at least, we can say the trends are neutral to slightly good. And then give it a score out of 10. You know, if that's where your favourite stock is right now, green critical minerals, whatever it might be, do the analysis based upon the methodology I've given you. Hey, you don't have to follow my method. That's up to you. But at least do it and give it a score out of 10. And I think we're like 5.5 out of 10, aren't we? All things considered. Because, we've got a bunch of supply in the system all the way back up here also. It's not really doing much on the relative strength comparison. I think volume's a bit ho-hum, a little bit ho-hum. It's picked up recently, hasn't it? A little bit. But overall, it's nothing like it was here. So we're not seeing the same sort of interest in it. 5.5 out of 10. And once you get to that point, it should be pretty easy. Like, what do you want to do with a 5.5 out of 10 stock? Let's go to the next one. And this is telling me where I need to remind you that we will stop at the bottom of the message. So S&P will be the last one we'll do, and then we'll work our way back up because we do need to stop at some stage tonight. And I've lost your second one. MTM, I found that now. I'm pretty sure this is a good one. It is picking up. Look, what's interesting here is we can see that was about 5.5 out of 10, wasn't it? Back down here as well, Rishi. But then this candle kind of changed everything. And that could be all we're waiting for in your last one on GCM, that one big demand side flourish. And yes, you'll have to pay more, but that is going to take it from example 5.5 out of 10 here to like a 7 or 8 out of 10. Ironically, this one hasn't done a whole lot since then. But I don't think it's panic stations yet. We're still holding the short-term uptrend ribbon. Overall, I think we're still predominantly demand-side candles. There's a little bit of supply lurking in the system now, here and here. But it's not panic stations. Where do we panic? I would want to see it. I would want to see it close beneath there. That'd be disappointing. And for me, I'd start to take some off the table, if only because I don't want to be stuck in this while it's going sideways for the next 6 months, and put that money to better work elsewhere. For me, it's still a hold. So I'm happy to hold a full risk position at this stage, but I'm probably not that far from just taking a smidge off the table at the very least. And candles and price action, that would be required to do so. Adonis saying, sorry, this one is ultra aggressive setup at 130. Not sure what he's referring to, but maybe Adonis can give me a clarification as I scroll down. Let's go to Robert, who's asking what the RSC is, and that's the relative strength comparative, Robert. So that's the indicator down the bottom. RSC stands for relative strength comparative. What we're doing there is comparing the performance of the security up the top against a benchmark index, in this case the ASX 200. And I've given you that tool, Robert. So if you go into your favourites on your trading view screen, I've given you that exact indicator that you can use. Okay, and you can actually change the benchmark from the Nasdaq if you're using US stocks to the ASX 200 if you're using Aussie stocks. Okay, and it's really simple. If we're looking for longs, we want to see it rising. Preferably it's green also, but rising is important. And for shorts, we want to see it falling. Preferably it's red also, but falling is sufficient. Hoozle answering. Thank you, Hoozle. And more than happy for you guys to chat amongst yourself and help each other, because that's what we're here to do. Donis is continuing his conversation, which I don't know where we started, but closed above orange on strong D. I think Adonis might be talking to somebody, and that's good also. So I'm going to keep moving. Adonis saying, poor Weagles. They are poor Weagles at the moment, Adonis. We were ahead at half time. I don't know what happened after that. Don't worry, my Blues aren't much better indeed. Particularly Ashes result. Is that what that is? I'm also a big cricket fan. 5-0 says Hoozle. Let's hope so. Hi Carl. Oz stock W8 as a continuation. I'm not sure if we saw in store 2 there's W8 there as a continuation. It's amazing. I can't fault it. I don't know where it's going to end. I don't know. This is the hardest thing you're going to do. You think taking a loss or getting out, you'll do that much easier, right, than buying this thing tomorrow. And yet, I think you have to. And I can't tell you what to do, and I'm not telling you what to do, but just from the point of view of my model and everything I believe in, that is a wall of demand and a vacuum of supply. So I think having some risk on the table here is warranted, and you can make it as little as possible just to play along. And you are going to pay tax at some stage when you follow these, right? Because I put this in originally at 6.3 cents. It might have been here. It might have been on that candle there, but I suspect I also put it on that candle, and that candle, and that candle. Okay, so I've also put it in on this candle. At some stage, you're going to pay the tax for following the model, right? And that is getting in at the top and seeing it go down. But if you do enough of them, you will get enough of getting in here and here and here, so that, you know what I mean? But at some stage, you've got to bite the bullet, because if you only ever follow the ones that don't go up, you'll be cursing yourself for not having ones like this. I'm not sure if that made sense. Currencies, AUD, USD is a turnaround. We're about to head over to the trading view screen, so we'll do those in a second, Peter. Remind me if I forget. We've got Coca-Cola Amatil from before. Perry's got some US stocks. We'll do those in a second. And S&P are at the bottom. And Adonis confirming he was speaking to somebody else. Matthew's come in with... They might be US stocks, I think, but I will check them here. The US stocks is confirmed. Okay, I've got one more to do, and then we're heading away from here. S&P is the one. Smartpay. This is it not under a takeover? I don't know what the story is. Not that it matters to me. That is a big gap up, and yes, it doesn't look like much of a candle, but it is really a big white candle. It is a big white candle, because we've got to put back in the bit between today's low and yesterday's high. So I know that's red. It's going to change in a second, and we're going to make that black there and white there, and that's the way we really need to visualize this. So on that basis, it's yes from me. I don't know what's going on with the takeovers, so and the only reason why I say that is it doesn't deter me, but you have to understand that in these types of situations, you could be stuck in for a while the takeover plays out. It could take a month, it could take 3 months. And what we're doing is we're playing for a higher bid, and the market is indicating that a higher bid's coming in this case. All right, I don't know, but that's what the market's indicating. So it's a yes from me on that basis. So plus 1/3, but on the basis that you understand what the hell's going on, right? Well, not understand, you don't need to understand it, but you temper your expectations of your timing. All right, let's head back up the list now. We're going to do all USA stocks and a few cryptos, a few currencies from here. That's where we're headed, and we're going to kick off with how we're going for time. Not a total disaster, funnily enough. Okay, Matthew's up first with HWM. Howmet Aerospace. We know aerospace and defence stocks are doing really well. If you look on the Australian market, ARMR and DFND have been popping up in my feature charts many times in the last couple of weeks, and this is probably why this exact stock is in that ETF. Looks great, can't fault it. Happy to be an owner of this, and probably many stocks in the sector. Why are defence stocks all of a sudden the best of the best? I'll let you come up with some reasons on that. But yeah, I don't know. I was about to say that you're probably going to get a fickle turn at some stage as well. But in the meantime, more than happy to back this trend. Plus 1/3, cannot fault it. Perfect setup. FRP if you have it. Plus 1/3 if you don't. Click save. Keep moving. Yes from me. LRN. Let's go Stride Inc. Also very good. Let's go weekly chart there. I'm trying to find who's got their mic open. Maybe it's that one. There we go. I think I've got you. That's the weekly chart. There's no impediments there in terms of overhead supply zones. Perfection. Can't fault it. And it makes you wonder, isn't it, just how much internal strength and built-in momentum these US stocks have when you've got charts like this. And, you really do want to think very carefully before you fight the bull over there. Let's go to DRS. Leonardo DRS again. These must be, I don't know what these stocks do, but they must be very similar because they're almost identical. And if they are from the same sector, just take that into account. It doesn't mean you can't take it, but understand when you're allocating your risk, you go, where is my risk right now? I've got 10 defence stocks. Okay, you've got a high concentration there of risk in that sector. Let's go to FRP plus 1/3 because I can't fault it. And Matthew there, as we would expect, Matthew always gives us good setups. 3 from 3, and PLTR is the next one. And also looking very good. I think we looked at this in plus 1/3 last week, but in a different template. So same again, ditto, perfect setup. And I like the fact that we are effectively, for all intents and purposes, dispensing with that point of supply there. And it's a major point of supply. So the market has got its head around it. Like the market's not worried about that anymore. And now they're thinking about 200 and beyond, aren't they? That's what they're thinking now. So let's absolutely say here plus 1/3 FRP. And here I was a little bit worried about maybe what tonight's candle might bring in the US, but I'm looking at these now, and maybe I don't need to be so concerned. Reporting tonight, says Matthew. So, caveat emptor on PLTR reporting tonight. I'm in pretty fully. Any thoughts? We'll go ATH at the high. ATH. ATH. Rings a bell. ATH. I don't know. Let's keep going. LRN. Perry got LRN as well. There you go. Great minds thinking alike on LRN. LRN about to appear. Just to remind you, Stride plus 1/3 FRP. KT. KT Corporation. Another great chart heading out to the weekly. And all we're doing here is making sure that there's nothing, no major points of supply from the recent past that we're worried about. There aren't. And I don't need to do any other work on this. They're perfect trends, perfect continuation setups. So if you need me to say more words, let me know. Otherwise, I think they're pretty self-explanatory. And all we're doing here is these very good traders, very generous traders that participate in this community are sharing with you some fantastic setups. We should be very grateful. I mean, I do the research. That's the wrong word. I do analysis in such that I talk about trends, but I'm not finding these for you. I don't do that US scan for you. I do the Aussie scan for you. So Perry and Matthew being very, very generous with their time that they took to find these for us. I'm not worried about that blip there. It looks like a currency ICO, doesn't it? Cryptocurrency ICO. That's exactly how they start out. But no, it's definitely not that. So Grindr. Okay, it's a dating app, isn't it? Of a particular variety, is it not? Hey, who cares, right? All is good in the markets. We don't care about any of that stuff. We just care if the stock is going up. Let's go. And VRSN. There you go. All good here. Doing the customary checkout there. Nothing to worry about. And plus 1/3 again on that one, FRP. So a smorgasbord of opportunity, spoilt for choice there. Thank you, boys, for those. Let's go back up the list. And if I do miss one, because I'm going through dozens of comments here, let me know when I get to the top. And I think we're pretty good. I did see somebody asking about the Aussie dollar there and one other currency, but I might have lost it. So let me just do the Aussie dollar while I look for the other one. I had it, I was in the right spot down here. AUD USD for a turnaround, so, and indeed it is. How about that? Who would have thought there'd be a trade war, potential global recession, and the Aussie dollar's doing that. And that tells you that money is coming out of the US and heading back our way. That's impressive. That's an interesting chart there. So yes, I agree with you on that one. Plus 1/3. 1/3 FRP if you're already on it. And the Aussie versus the New Zealand dollar was also requested. That one's less interesting for me on that one. Not an aggressive setup, no, because there's no real base pattern there. And we don't even have a dink yet. We don't even have the high peaks and high troughs yet, so I'll pass on that one. Moving up the list to find any US stocks here. And sorry for the blank air there, the dead air. PLTR from Rupam, which we've done, and KTOS coming up now. Kratos Defence, another defence stock, so one we've looked at fairly recently as well. No complaints, a little bit of an upper shadow there. Is that enough for me to not do plus 1/3? Or it'd be look, if this was the only thing we saw tonight, I'd say, yeah, let's do the 1/3. I think given we've seen so many other great setups, I'm just going to go FRP on that one because of the upper shadow. But yeah, I'm nitpicking here. Next high close certainly is plus 1/3. And I'm being really pedantic, aren't I? From that, because of that upper shadow. Next high close, let's type that in also. And I think I might be back up the top. No, we've got Adonis's, got a few here. NHC, and I'm guessing that's a US one and not the local or national healthcare corporation. Oh, next high close, sorry, Adonis, you're looking at Boeing, and you've used my own acronym, fair enough. Yes, yeah, why not? As a turnaround setup, it's certainly meeting my criteria. So no complaints from me. I reckon that short-term trend ribbon is not quite green yet, but it'll be literally one candle away from it, I'm guessing. Yeah, so I reckon it's going to be very, very close. Very, very close to firing green. And on that basis, plus 1/3. Next high close, but you do need to wait for another one more candle, I think, because there's still a little bit of supply here. Okay, otherwise it will meet the criteria. I know you've been watching that one for a while patiently. Let's go Costco. I like this one better than the other one. I mean, this is a much better. I know this is more continuation, but it's one of those hybrid setups. So I'd back this one before I back the other one. But yes, I do like this one. Also on a next high close, and in the interest of getting a nice mix of setups, I mean, the pedigree is here. So, you know, I think I'd rate this very highly, but I do want to see that next high close also. So let's save that away. Meta and Tesla, and then I'm pretty sure we're done for the day. Let's go Meta. Yes, it's very close. A little bit of a dink, perhaps, is what we probably still want just something. See this little point of supply here? So maybe just a little bit more patience. So something like this, show a little dink and hold there, and then next move up. And I won't draw the green box, but just a nice little lower shadow in here. But another couple of candles. Look, if you don't see that and you just get a great big white candle, happy to go also. But otherwise, yeah, I'd be looking for that sort of price action. Let's go to, let's actually save that. Let's go Tesla, TSLA, having a bit of a recovery also. Not far away, to be fair. I know, very controversial stock at the moment, but yeah, not far away from a turnaround setup. It's got a little bit of work to do here on the short-term uptrend, but one to watch. I won't write anything on that. I think it's going to be 1, 2, or 3 candles. That's the order of magnitude from it. But certainly it'll present as a turnaround setup more likely next than anything else. Let me just scroll down the bottom and see if I missed anything, and I don't think I did. I think I got them all. So last chance to tell me I didn't. Otherwise, we are going to head over to the disclaimer again. And just remind everybody that everything we've discussed tonight is general in nature, has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of that sort of stuff, you should consider it carefully or seek the help of a financial professional, because they will tell you that all of my strategies are downright crazy. Always remember that it's you and not me who's responsible for the stuff you do, and it is possible markets go the wrong way and to what you hoped, and you could lose money at some stage. Other than that, it has been an absolute pleasure chatting with you again this Monday evening. We'll be back, of course, next Monday evening to do the same. All the best for your trading and investing. Until then, bye-bye for now.